Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow, and I've got some pretty interesting stuff to share with you today. A couple things. You'll notice this little thing on my arm. I went and donated blood today. Pure blood. It's worth a lot of money, apparently. I'm just kidding. I don't know. So I've got some news to go over because we're going to talk about a potential $4 price prediction of Cardano. Cardano price prediction, $4 by the end of 2024. And then we're going to go over some stats that I've been looking at, and I'm going to see if maybe you guys can help me crack a code in Cardano's price action. It's something in the works. It's just one of those things I work on sometimes. But then towards the end of the video, I'm going to basically cover for newcomers ultimately the difference between like causation and price and speculation and price, which I think may be useful for some people to kind of help you understand some of the terminology that gets floated around in the cryptocurrency space. So first thing we're going to look at is a little news. Cardano Whales going crazy on ADA. Buys as pundits predict $4 ADA price explosion in 2024. On January 4th, cryptocurrency analyst Ali Martinez reported that Cardano Whales have acquired over 14 million ADA tokens in the last 2 weeks, valued at approximately $8.4 million at the current exchange rate. So obviously, whales are accumulating ADA tokens like crazy. They're expecting to see significant price rallies as we're moving forward into the halving. When I show you my charts, there is one thing that's a little bit alarming that I'll cover, but these substantial purchases by high net worth investors are commonly interpreted as a bullish signal for the specific crypto price. Despite Cardano experiencing a nearly 20% drop this week, reaching $50 or 50 cents, $50, that'd be funny, following Bitcoin's 10% pullback. Now, keep in mind, I pointed out in the past how typically if Bitcoin's price drops a certain percentage, Cardano typically follows 20% more. But the same is also true when the price is moving up, but it's not instant. So when Bitcoin's price drops, Cardano typically drops about 20% more than Bitcoin does. But when Bitcoin's price moves up, Cardano doesn't necessarily follow it by 20% in the same instance or time frame. But generally, Cardano's price rise magnifies even further. So it's a very interesting system. And I one of these days, I'm going to crack all of it. Pullback due to a pessimistic report on the potential approval of a spot ETF. In the last 2 weeks, I don't know if I follow him or not. I might have to check him out. In the last 2 weeks, Cardano Whales bought over 14 million ADA worth around $8.4 million. That's just crazy. Pretty much, it looks like all in one fell swoop for the most part. Now, Cardano, one of the most innovative smart contract platforms. I don't know why I'm struggling. I did just donate blood. It might have something to do with it. My vocals are a little off today. Competing with Ethereum has a mixed performance in recent months amid significant fluctuations. This is par for the course, influenced by Bitcoin's decline in the U.S. Securities and Exchange Commission allegations that ADA is a security. It's not a security. I'm 100% confident in that. I've listened to Charles explain explicitly in very specific details about their fundraise in Japan and how that was handled through vouchers and all sorts of other instruments. And it's just not, and it's the most decentralized blockchain out there. So I think for whatever reason, to be honest, I feel that the SEC likes to name projects as a kind of a middle finger to the crypto market. And I almost feel like they base their decisions off of what they perceive to be the most competitive against whatever the plans are that they have as far as CBDCs and other things. I really do. I don't think it has anything to do necessarily with, this is a security or that's a security. Because if you look at everything happening with Ripple now, I mean, come on. Now they're going to start handling like FedNow transactions. I mean, I just think that the SEC likes to target and throw names around that they believe are either going to be competition for their own ambitions or whatever. But I don't really think it has anything to do with what is a security anymore. I mean, what is actually what it's claimed to be nowadays? Let's be real about it. I mean, the last several years, it's like, upside down is right is upside down. What's bad is good. What's good is bad. Everything is just, it's like a mirrored universe that we're in. And it's absolutely insane. Nevertheless, the company responsible for Cardano's ecosystem development, IOG, has repeatedly asserted that the SEC is mistaken, emphasizing that ADA is not and has never been a security under U.S. law. So, whatever. I mean, we'll find out. But ultimately, this gentleman believes that we could see a $4 price of Cardano in 2024. According to Martinez's chart, once ADA exits this consolidation phase, the price should aim for approximately $4, marking a 600% increase, a staggering 600% increase. I actually think that's highly, highly, highly probable. I think that 2024 is going to be the year I think we could very easily see $4 in Cardano by the end of 2024. Quite frankly, I think it might even not take that long, because I think as we go into 2025, which is where I see the peak happening, we might hit somewhere between $5 and $6 by the end of 2024. And that's what I believe. I don't know if that's going to happen, but that's what I'm seeing now. Moving forward, I'm going to show some charts here. This is something I've been kind of messing with lately, showing a lot of the different nuances of Cardano's price, and then how that price translates into active address, like wallet addresses on the Cardano blockchain. And if you look all the way back here at Cardano's original peak prior to after its launch, okay, because it launched in early 2017. But you'll see here, we got this peak around $1.38, and there were 7,601 active addresses. Now, keep in mind that there are a lot of metrics as it relates to Cardano, but active addresses means generally that a transaction was committed to their wallet. Excuse me. A transaction was committed to the wallet, either a send or receive within, I think it's 24 hours. It might be a week, but I think it's 24 hours. So this isn't to say that's the total number of addresses that existed at the time, or that were really kind of active. But active meaning there's a transaction within a 24-hour period. Okay, and once we got that peak, that was the first peak, and I remember I bought in. So I started my YouTube channel around November of 2017. I think it was like November 4th or something to that effect. And I bought in Cardano at 33 cents. That was my first Cardano purchase ever in history in 2017. And I remember explaining it all and breaking it all down on my channel back then. So I have definitely been a part of Cardano since really very close to inception. Now, we move forward. From that peak, it took 798 days to reach the bottom. Okay. Now, what's interesting is that when I'm looking at the price, there were other instances that were very close to a bottom, leading up to the actual price bottom, which was ultimately a wick, because one of the first bottoms could have been all the way back here in like December of 2018. All right. And that wasn't the bottom, because we went up, we went sideways, we ranged down, went up again. We ranged for quite some time. And then we started to move back down, ranged forever, went up again, this is about where I see us being currently. Let me take a look at this. This is alarming to some degree. So let's just say we were here. That is 87 days prior to the halving. I have to double check and see where we are now. That's 236 days. We're not that far out. And I know that there are a lot of differences now, right? There are a lot of differences, but the actual bottom was only 60 days from the halving, the Bitcoin halving. And that was in 2020. Now, from that bottom in 2020, it did not take us long at all to get back to a top, which was about, it rose up over, let's see, what was that? That peak, the official peak of that market for Cardano. And you keep in mind too, if you're looking at a Bitcoin chart, the Bitcoin chart, both peaks are very, very close, but the second was higher than the first. But in Cardano, the first peak was nowhere near as high as the second one, which tells me that the altcoin speculation market really drove that second peak home. They put that money back into Bitcoin and they tried to get like kind of a double wash out of it almost. At the time of this peak, which from halving to the peak of the cycle, it's 476 days, a little over a year from the halving to the peak, to the second peak, which I consider this the official peak. Now, 146,000 active addresses at the time. And keep in mind that, and I don't have this all laid out here, but we did all of this purely based on speculation. Because all the way back here, Cardano was a dream. It was a white paper. It was a team. Okay. As we moved forward, we had to meet all these different development milestones that drove Cardano's interest in speculation forward. And, you know, the difference in that is that we had just gotten smart contracts, man. I can't even remember if they were just before or just after. I think it was in May. I can't remember off the top of my head, but it's not really relevant right now. But 146,000 active addresses. It took 646 days from the peak to hit the bottom. And that's the official bottom, because maybe the official bottom. Okay. The bottom was around 20 cents. Okay. I think it might have wicked down to like 19 cents, something like that. But you can see here, it was a 22 cent, 23 cent, 22 cent bottom. This is when we originally thought the bottom hit, but then we got another one down here, and you'll see that this kind of hovers for quite a while. All this time, Bitcoin's price. This is all present day, folks. This is all 2023 now, because here we are. Now, what's interesting is this is the halving. So if we just went 86 days, we could potentially get a flash crash into a new bottom here. Now, it may not happen, and I'm not saying that, oh, well, this is how everything happened exactly to the day, to the letter, to the P, to the I, and before the last halving. There are a lot of differences. Number one, we have 65,000 active addresses as of the bottom of this period here. Okay. So there's a lot more momentum, a lot more activity, and above all, a lot more usage, a lot more use case. There are a lot more people doing things, whether it's with native assets, NFTs, DeFi, et cetera, that we didn't have back then. So the price was a lot more easily manipulated, choked, you name it, than it was back than it is right now. Okay. Because you'll notice that we held pretty steady above 20 cents at the bottom. So we went from like a 2 cent bottom to a 20 cent bottom in a matter of one cycle. Now, what's to be expected from here? I believe we're probably going to peak out somewhere around January, February of 2025. And these are the time frames that we're looking at moving forward. I still firmly believe that we are going to have at least a $6 to $8 peak in Cardano's price, but it could really be substantially higher than that. I think 2024 is going to be an absolute pivotal year for the cryptocurrency market. And I think Cardano is going to be playing a major, major role in what's to come. Now, as we look at a lot of the pricing, the use case, the growth, everything happening on Cardano, there are a lot of other blockchains out there, obviously, that are going to do very, very well. I am primary on Cardano because I'm more risk averse than many. I mean, I've learned so much since 2017. There are a lot of mistakes that I've made in crypto investing and everything, and I've always just kind of spent all this time trying to learn, trying to better understand why XYZ happens, right? There are a lot of different reasons, but I want to go into basically a brief explanation of like I guess you could call it causation over speculation, because if I look at Bitcoin's price, all of the price action all the way up until like 2021 was all pretty much purely speculation. The speculation is basically when you're buying something because you believe in its future, but it's not doing much today. Okay. So you're thinking, okay, well, this is a great idea. Like when a company has an IPO, that in itself even is not even speculation. I mean, it is, but it's not, in the sense that typically when a company launches an IPO or initial public offering through the Securities and Exchange Commission and all that, you have to have a certain amount of revenue to your company, basically proving its use case before you can even go public. Because it costs like nowadays, I don't know what it is. I know it used to cost like at least $1 million just to go public with all the registrations, the legal hoopla, everything you have to do. But that's kind of what separated crypto from IPOs. We had ICOs. An ICO, you just needed an idea and a wallet to receive quote unquote donations for the most part. And, we can call them investments, but for the most part, they ended up being donations because a lot of these ideas went to crap. People would launch these ICOs. They would suck up all the money and like, oh, we couldn't do it, or we didn't do it, or they rug pulled, or just everything you can imagine. And I feel like in many cases, there was never even an effort to try and build what these ideas were. And I believe that is a big part of what spawned the SEC really going after people, because it got really, really shady, where you had these ICOs and then they're backed by whoever in terms of getting the marketing established to basically buy sentiment, to buy speculative sentiment amongst the public. And a lot of the ways they were doing that were through influencers, guys like me and everyone else who were basically paid to promote what we would think was a good idea. This looks really, really good. The difference is I always disclose everything that I talked about on YouTube. Always have, always will. There were many that did not. I did not like the idea of basically being paid to talk about a project and not disclosing that sentiment, whether I really like something or not, the sentiment was inspired by sponsorship. And that was a big problem that created a lot of FOMO in a lot of projects, because very well-to-do, very big names in the crypto or influencer space were being paid to pump shit projects. And they often didn't care whether it was a shit project or not. They just wanted to make that money. And I noticed that was a much bigger trend with YouTubers outside of the US, where there were no regulation. When I first got started in crypto and YouTube, I had no idea what was regulated, what anything meant. I didn't know what was what. I disclosed things because it just seemed like the right thing to do, given the nature of the space. But even when everybody realized, hey, you have to disclose this stuff in the US because it's the right thing to do, only US people really started doing it. So you have to keep that kind of thing in mind. And that would ultimately build speculative value, whether it was worthless or not. Now, the difference between that speculative value that can in many ways be purchased, okay, which we see that all today through paid articles, paid advertisements, paid segments on YouTube, you name it. We see the speculative nature building around a lot of projects. But the use case or causation of that price action through use, development, and building of applications that are sought after and being used by the public, that is what I believe will and should be primary in this next market cycle. Why? Because we've already had the dreamer phase. The dreamer phase to me was 2017, 2018. That was like, look at this grand technology and think of all the amazing things that we can do with it. And then from that market, we got into the 2021 phase, which for a lot of crypto projects out there, especially layer one blockchains, that was the phase where we started to separate the junk from the real tech. Okay. So you saw there are a lot of cryptocurrency projects out there promising to win, but delivering very little to nothing. And those projects ultimately vanished out of thin air, only to be replaced by a lot of FOMO-ridden projects that everybody wanted to get in on the ground floor and be able to invest $100 or $1,000 and hopefully turn it into $1 million by the next cycle. Well, we saw how that ended up in 2021. And the top 10 of the cryptocurrency space can always change on a dime with new technology proving itself with better funding, better marketing, better support, but ultimately better use case. And when I look at the Cardano blockchain, yes, its development cycles have been slow because they've had a very scientific academic approach to building things right the first time, which to me establishes my sentiment behind Cardano being more risk averse. Maybe it doesn't go to $30 in the peak of the next cycle, but I also believe that it's going to rise up much more significantly than a lot of that crap at the bottom that makes a lot of claims and promises, has never proven itself, but ultimately is discovered to be a rug pull or a crappy project that was never meant to do much of anything to begin with. And then there are going to be other projects out there that have significant venture capital backing. They're paying and buying the sentiment across the board, across all crypto news media and pundits on television and all this other stuff. The ad dollar goes a really, really long way when it comes to establishing FOMO and garnering support from the public. Because as we see time and time again, all it takes is a narrative established by an advertiser to draw people in into almost religious cult-like state. Okay, that's all it takes for a lot of people. They don't really care about doing any research or understanding the technology or understanding the narratives behind the narratives. What they care about is what they're told may very well be something that will change their life or save their life, whatever the case may be. So people buy into that stuff in a significant way. Now, I am definitely going to be looking hard at a lot of the projects launching on the Cardano blockchain over 2024, because now is the time that we separate the crap from the good. And with over 1,300 projects in development on the Cardano blockchain, with Cardano being the number one developed blockchain for years and running, when you're talking about GitHub commits and everything else, nobody's even touched Cardano's development. The team is massive. The number of people building on this blockchain is massive. And I believe that they're doing it, and they're putting all of this time and effort into building Cardano the way they're doing it because it is going to take over cryptocurrency in general. There are a lot of projects out there. Some may have higher throughput. Some may have maybe better scalability today. There's still a lot of things that are shaping up, such as Hydra. We've got the Voltaire era, where we're talking about decentralized consensus and ultimately democracy on the blockchain, which I'm very much looking forward to seeing as significant use cases arise across different countries that are going to be more apt to utilizing a technology such as Cardano for identity, for voting, for you name it. I'm going to be looking hard at projects like Cornucopias, one of the biggest, what I consider to be a AAA. You can classify AAA as something entirely different now. Maybe you need $100 million to be AAA, but at the very least, it's going to be a AA metaverse project that I think is going to do exceedingly well. It's already doing very well. The token used to be a penny. I don't know what it is at the moment. I'm sure it's higher than that. When I was telling everybody all about it for the first time, I believe in World Mobile Token and what they're building in Africa and other parts of different countries to connect the unconnected and empower them to be able to take advantage of the Cardano technology. I believe in Cardano because of the money and the effort that they're putting into educational systems in different countries to teach people how to build applications that are worthwhile, will drive up the use case on Cardano. We've got things like IAG, which I believe is going to be like basically the file coin for decentralized storage on the Cardano blockchain as it relates to Cardano. There are so many different things that are being built, but they're being built on a more secure blockchain with which its scalability, and I'm sure as we continue to move forward, its interoperability will continue to increase its reach and ultimately further itself as a world-changing layer one blockchain, not to mention midnight. Folks, there's so much that's going to be happening in 2024. I'm going to be trying to crack some codes, trying to figure out where we're going to go, and that's ultimately what you can expect from me moving forward. I'm probably not going to spend a lot of time on projects that maybe you think are cool because you saw an ad or you saw something here or there, but if it catches my attention, I'll definitely put time into it, and that's pretty much where I'm at with things. So until next time, guys, I hope you've enjoyed your weekend, and I will see you very soon. Crow your coins.